What is up, guys? Today I'm going to teach you about fair value gaps or imbalances. Now, what is a fair value gap? A fair value gap is a big imbalance in price, and now I would draw one out for you. So say we have our first candle looking like this, and you have your wick right here. That's your wick. It's kind of ugly. That's your wick too. And so it's a 3-candle pattern essentially. So then say we have another wick right here, another candle right here, another wick. A little ugly wick, I know, but okay, now we're going to draw our last candle because why? It's a 3-candle pattern. There's our last candle. So, as you see this, there's 3 candles. 1 candle, 2 candle, 3 candle. Now, from here to here is going to be your imbalance. Now, these imbalances form on any time frame. And essentially all it is where price is not balanced, where orders have not been filled and things of that nature. But they can be on any time frame. Look, I have 4-hour, can be 1 hour, can be 15 minute, it can be on the 1 minute, and it doesn't, you can use these anyway. I'll show you a lot of examples. So here is a prime example of price. You see we have a big move to the downside. You have 3 candles, 1 candle, 2 candle, 3 candle. In that in-between area where the wicks don't touch from the first candle and the third candle is your fair value gap or your imbalance. Like you can also see, if you can spot it, there's an imbalance right here. It's just where there's a big move up or a big move down. And think of it as there's open space that needs to get filled. As you can see, when we had this imbalance right here, eventually price came down and filled the whole imbalance. And we have this big imbalance right here, price came back into the imbalance to fill it. Think of it as an empty cup and water needs to go into it. It doesn't have to fill the cup fully, but at least a little bit. Now I can zoom in and show you. We can look at another one here. So they're all over. You have one right here, you have a big one right here. As you see, price came up and created an imbalance right here. But what does price have to do? Price has to fill that imbalance with water. Price has to fill the cup with water before it can move. What does price do? It comes down. This time it barely filled the cup with water, but then it moved higher. But there's many ways you can use imbalances in trading. For example, look, imbalance right here. Where does price go? To fill the imbalance. Look at all these imbalances right here. They end up getting filled. So today, for example, where are we at? Let's find market open. Monday. Right here. Sorry. Here is a imbalance right here. This is a 5-minute imbalance. And look, price comes into it and fills it. Thing is, these imbalances must get filled. But this is the one I wanted to show you guys. So you have this volume imbalance. That's essentially what it is. So you have a 5-minute fair value gap right here. Price comes up, fills it. Price comes up, fills it. Creates another one right here, and it gets fully filled. Price is always going to fill these fair value gaps. There's rare times when price will just not ever go back to that fair value. It might not go back to it right away. Like for example, right here, it might not go back to it, but it will eventually. Now I'm going to find you an example of show you what an inverse fair value gap is. This should work. Let's see if it's better on like the 15-minute. Where just was I? Top. So okay, and then there's inverse fair value gaps, and all an inverse fair value gap is a fair value gap in the opposite direction. So as you can see, whoops, that's not what I wanted. Price creates a bullish fair value gap and then runs straight through it. Now it becomes an inverse fair value gap because it's still an imbalance, but it's not in your favor anymore. If it was in your favor, you would expect price to do something like this: come down, fill it, and then go higher. But since it didn't go higher, it now becomes it is a bullish fair value gap, but your bias is bearish, so it's an inverse fair value gap. Or if it was a bearish fair value gap and your bias was bullish, it would be an inverse fair value gap. For example, right here, bearish fair value gap gets ran through, becomes an inverse fair value gap for your bullish trend. So if your bearish bias, bearish fair value gaps turn to inverse fair value gaps in a bullish trend. Essentially that. That is really it. And there's something called BPRs, but we'll get into those another day. Those are a little more complicated and stuff like that. And also, if you guys want another video like going into depth and show you how you could use these in your trading journey or things like that, I could definitely make a video for that. Essentially, all a fair value gap is an imbalance where there's no water. Think of it as like that. If all these charts are water, these candlesticks are water at equal levels, the imbalance comes and then a cup doesn't get filled with water. So then the cup must get filled with water, so price goes back into that imbalance to balance the price. Imbalance, balance. Does that make sense? But yeah, that's all I have for you guys today. If you enjoyed this video, join my Discord. It's a bunch of traders and we all talk and get along. It's free. Just ask questions. Try to get better as a trader. That is the part. It's trying to build a community here. Thank you guys so much for watching this video.